you are now based in London. This is the old financial center, how I can say it.
Oh, yeah.
What changed after the ETF approvement?
The UK's position, and this is based on my understanding of it,
Yes, sure.
has always been watching where the market goes, then creating standards that set an example of where the market should go. I think FCA is already starting. I already see the signs of FCA creating that.
So what is FCA?
Financial Conduct Authority. So essentially it's a regulator, it's the governing of.
Okay.
FCA started putting a lot of groundwork in adopting crypto and in making crypto a safe environment to invest in through regulation, control, and...
Do you think it will happen later this year?
I think it's already happening.
Okay.
There are some FCA licensed crypto venues in the UK. Before you simply couldn't. But it's definitely happening. Right?
You know, when we talk about crypto market, we sometimes set a parallels with the Forex market.
Absolutely.
Not with the traditional stocks, more with the Forex. Maybe can you share with us some trends that you see that are moved from the Forex industry to the crypto field?
This is a silent trend that people not really talking about yet, and probably will be interesting to your viewers. But crypto trades, we started calling it cryptocurrency, right? Because it came as a means of payment. What does crypto do? It helps us make payments cross-border without paying huge fees and going through a SWIFT, waiting many days. What is currency really? Currency is a mean of valuating a certain ecosystem and assigning a value to a certain ecosystem. Traditionally, it came from geographies.
Like geography, like a countries, yeah.
Exactly. Crypto changed that narrative completely upside down. It's ecosystem. What is an ecosystem? Nobody knows. Now the ecosystem, if you imagine we create an index here right now on this podcast, and we say an ecosystem index is the rate of usage of one layer 1 or layer 2 or the other, hypothetically, right? How busy is it? And then we need to look into the fundamentals of what is the value of that ecosystem, that usage. What does that actually do? Only then we can determine and understand what is the value of this ecosystem, what does it bring right now. Crypto hasn't really decided, and there's a lot of commotion and fragmentation because it's not yet clear. One thing which is very, very clear, it's a great exchange, means of exchange for data. It's a great payments tool. It's a great tool for tracking.
What do you mean tracking?
Identity tracking, ownership tracking, any kind of data tracking. Right? Because right now we're in big data world, so it helps. But when we compare it to the comparison that I drive with the foreign exchange is how it's traded in the market, right? Because foreign exchange has, take it high level, we can break it down into two markets. There's real money and there's fast money. So real money is people with real cash. They go to work, they earn salary, they go to Mercedes-Benz, they buy a car. Or they have a pension fund. Or they go and invest into an investment fund. That's real money because that drives real value and it requires real settlement. There is a cash transaction. There's value transfer from one person to another. Fast money is speculative. It's two hedge funds trading against each other on CME or in fast match or in hotspot, right? Various exchanges. They're speculating in price. They can be market making or aggressing or whatever the case may be. But at the end of that trading day, the settlement, if it's 1 or 2 or 3% of the entire trading volume, that's something. That's significant. Normally, the risk hedges out itself, and that is a speculative transaction of people speculating the real money is moving this way. Something happened fundamentally in the UK, let's say, or we're becoming crypto friendly. We're inviting Web3 businesses. We're going to do this. If something like this happens, all of a sudden there's going to be a positive influx of the economy. And the movement is going to start happening. That allows someone to speculate on market movement, right? But real money is much slower. So where is the real money economy of crypto?
I have no idea.
What's the point of Ethereum? What's the point of Bitcoin? What's the point of it's R&D and adoption and experimentation and testing phase. Because it hasn't become an integral part of your life, besides some of the emerging market countries that are trying to hedge their local currency risk because of unfortunate fundamental issues locally. But otherwise, it's very hard to predict precisely. One thing I can tell you, though, the institutional adoption side of things is going to change the way we interact with the crypto ecosystem, the centralized side of it for sure. An interesting aspect of that is, okay, let me ask you a question. What happens if Binance closes down tomorrow?
It will crash the market, I think, for 80%.
Why?
Because the people will lost the trust in crypto field, let's say in white crypto field.
True. The biggest risk of Binance going down tomorrow is people losing their assets because they're also hold assets.
Yeah.
The fun part is that Binance is also servicing institutional clients. Institutional clients in traditional markets do not trust their assets to an exchange. You can't come to CME and deposit money into your wallet. That concept doesn't exist. What normally happens is you have a clearinghouse, or you have a prime broker, or you have a bilateral credit agreement, and then you're allowed to trade on the exchange. An exchange doesn't care about your wallet balance. They don't have control or access. They just know that you have a certain credit limit or you're...
And they just provide you a service.
Just a marketplace. And they're also not a principal. They don't take buy or sell positions.
Yeah, sure.
Can we say the same about crypto?
No, we cannot.
That's quite dangerous, right? So this is why crypto markets are very fragile. And I put huge amount of importance into development of execution-only marketplaces where big volumes can be executed safely, securely. Wash trading and print order book printing is no longer an issue. And those environments are regulated well enough so that nobody can scam the market.
So that's why we see the growth of the DeFi infrastructure, etc., because the industry needs something similar that having in a real world assets.
Absolutely.